Ascendis is headed up by Carsten Wellner.
Exactly. It's Coast to Coast Group that put this on the market about 2 years ago, perhaps. It's an exciting company that is basically acquiring, using the listing, a whole bunch of companies that operate in the generic pharma area, also in the health and wellness space. So those are those performance-enhancing supplements, and in addition to that, they've got some assets in the phyto-vet area. That's
I was going to say in the animal health and wellness
fertilizers and all that sort of stuff. But it's interesting. They're buying businesses. They've got debt facilities in place. It's a high-growth, interesting-looking operation.
Market cap here, we're sitting at 4.1 billion rand, a PE of 21, and a dividend yield of 1.5. Have you had your eye on Ascendis? You have?
Actually, yes. Yeah,
have you bought? You said you've got no pharma exposure.
They've got no pharma yet. Their thing is we into people and vets and everything in this area. So they actually got a very interesting business. Their organic growth without acquisitions showed a 15% turnover growth, which is fantastic. And they say they can keep it between 10 and 15% for a number of years. Then, of course, they're doing all of these acquisitions, you know, in the, I don't know what you call it, in the machines part of pharma care. So they're doing a lot of eye and respiratory, so they're buying a lot of businesses. They're expanding rapidly, and the underlying organic is actually extremely good. And at a 21 PE, when you've got companies like ShopRite at a 30 PE, this looks reasonable.
Humans, animals, and plants.
Yeah.
Yeah, and that's the sort of thing that ties it together. But what really ties it together is that Carsten runs the business, and he's taken divisional managers, the best people he can find in all these businesses they're acquiring, giving them more broad responsibility. The guys at the coast-to-coast level, which is like a private equity group, they're running around trying to find other companies to buy. So they've divisionalized the labor there, and they use equity to buy the businesses in addition to some internally sourced cash, because now, of course, they've got a bond program, they've got scale going. So I think they can continue to grow this model.
Let's have a look at the share price here.
They've exceeded their listing guidance in the prospectus. They've paid a dividend early, which was interesting. There's been a little bit of sailing of stocks by insiders, but I think that's fine. It's starting to kind of get its own place in the market and attract the right kind of attention.
It's got a good strategy, which is, you know, differentiates from the other pharmaceuticals out there.
Look, I mean, it certainly seems to be in a strong growth phase as far as earnings are concerned. The earnings growth was very, very strong. But I suppose most importantly of all, at a 21 price earnings ratio, this is not excessive. It's not 40 like Aspen was.
One extra point to add also is that if you're in the pharma space, it sounds nice because you've got drugs that sell for high margins, but there's a lot of regulatory approval required to the Medicines Control Council and the FDA and all these sort of people. When you're in the sort of complementary health area, that is much easier because you can manufacture
less regulated, easy to maneuver, and you can be more nimble.
And having said that, if there are challenges to whether the efficacy of the drugs, then you do have to go through the process. But the typical approach in this industry is to then withdraw products that have those kinds of problems.
Hot or not on Ascendis?
Now, I think there are some issues about the quality of all of the deals that they do, but I think the management team and the trajectory of the company gives it a hot from my side.
Hot or not?
Hot.
Hot.